Hi everyone, good to see you all and good to be here. Thank you so much for inviting me to speak today. There's a timer, okay, 15 minutes. So my name is Luvleen and I am the founder, CEO, and chairwoman of BM Technologies. As we shared, we are one of the first neobanking fintechs to be public and to have a profitable business model. We have fortunately about $1 billion in deposits. Our customers do about $3 billion in annualized spend for about 1.5 million customers today. So this is like fast forwarding quite a bit. So maybe just the second slide. What is our story? How did we get to where we are? Right there. Thank you. That's good. Maybe it's me, so apologies. So how did we get to where we are? So in 2014, I had just graduated from business school at Wharton, and I had the entrepreneurial bug, taking Ethan Mollick's entrepreneurship class. And I was really intrigued, having graduated from undergrad in 2008. My first day on the job was Lehman Brothers in the bankruptcy, and I joined Lehman Brothers. So it was an interesting start to my career. And so when I graduated from Wharton, it was this unique time where the consumer sentiment of kind of hating banks was still reminiscent from the 2008 era, and technology was also leapfrogging. And so this idea was sort of born where could we get consumers to really love their banking experience and leverage the fact that technology is now leapfrogging and you could use technology to provide this better experience. So it was really that simple of an idea, and I really had sort of 3 pillars in mind that I wanted to make sure that we were hitting. First was, could we create a product that was better, that was more affordable than what existed today in the market? Second, branches were illegal, so how could we use technology and totally eliminate the need for any branches, any footprint there? And third was, could we create a growth and an income model where we could be profitable? So we didn't have the luxury of being VC backed where we could just really grow on growth, and we were actually incubated by a publicly traded company at the time. And so we were kind of forced to think, how do we become profitable and profitable fast? And so we started with this idea, this mission, this passion. I was 28 at the time, was very excited to do this. And what I found in my first year was that we were hitting goals 1 and 2, but we weren't hitting goal 3 of being profitable. And so what happened a year and a half in was the direct-to-consumer strategy wasn't working. Our CAC was really, really high, which is exactly what's happening right now. A lot of experimental accounts where we were seeing fraud, we were seeing small balances. So all the things that you're hearing today of why these models aren't being profitable. So at the time we thought about how can we pivot? And we pivoted, and in the pivot I wanted to ensure that we still held true to our mission. But we just had to figure out how do we acquire customers and at a very low cost and engage them and retain them to be profitable. And so we pivoted to a B2B2C model, which somehow became banking as a service and embedded finance today. And I'll talk a little bit more about that business model in a bit. But just for those of you that are learning about banking as a service, I'm not sure everyone that's in the room today. Banking as a service is really a business model that enables non-banks, fintechs, brands, etc., to be able to offer banking services without having to become a bank. And embedded finance, at least in my definition, I'm sure there's a lot of definitions that go around, is within banking as a service. It's just then embedding those banking products and services within your existing ecosystems. And so that's really what it is in a nutshell. And so banking as a service companies like ourselves, what do we offer? In the most basic fashion, we're offering bank accounts, checking accounts, savings accounts. We're going to offer a myriad of lending products. We enable payments to happen, whether that's P2P, bill pays, payment processing, digital wallets, international remittances, etc. And for people to be able to access their money using cards, whether that's a virtual card or a physical card. And in order to be able to enable companies, fintechs, etc., to be able to offer these banking products and services, there's really 3 pillars that are essential to actually be able to launch these types of programs. The first is technology. It's very important for us to have the technology for these companies to launch these products. We offer in 3 different forms. One is purely API-based, That is for those that truly are embedding the experience and have the expertise on their own teams to be able to ingest those APIs and to be able to launch these banking products on their own. Honestly, I think they're far and few between. It's mainly fintechs that are capable of doing that, but not the brands of the world that want to get into this. And then there's a total other extreme, which is the white label applications, where it's cookie cutter, it's done for them, but it's still customizable in the way of having their own brand, their own colors, their own fonts, and product customizations here and there. And then third is probably the most popular approach, which is like a hybrid approach, where you can provide them APIs, but you also provide them screens for things that are just they don't want to figure out from scratch. So number one, you have to offer them the technology to be able to launch these programs. On the far right is the bank partner. So you have to bring an FDIC insured institution into the mix, and also to be able to provide that final compliance oversight to these programs, which is essential, and it's only going to become more essential. When we first started out, it was the wild, wild west. Like, no one knew what you were doing, quite frankly. And now, I heard there's regulators in the room, so that doesn't mean that we don't respect the regulatory environment. It just means it took time for the regulatory landscape to catch up to what was being done. And you need to have a partner bank that is well versed in this space so that they know how to make sure that they are taking risk very, very seriously. And a partner like us on the banking as a service side that understands it equally as well as a bank. We were born from a bank, so we know that. And then the third pillar that's often missed and not part of these banking as a service offerings, and that's why we've actually partnered with Helix to provide this, and Ahan will be speaking later. He's the GM of Helix, to offer the program management. So this is the capability, the expertise to be able to offer compliance for daily BSA, AML, KYC, fraud as a service, banking operations, exception handling, customer service, and also not only that banking expertise and experience to run these programs end-to-end and fraud managed services end-to-end, but also the engineering, the development, the program optimization, the strategy behind it. Like, that's all that we provide today. And there's very few players that really combine all three, and we're really proud to have been able to create a company that can bring all three of those to the table. And so how are we employing embedded finance and banking as a service today, just to provide a use case? So we have two main verticals. One is our higher education vertical, and it's a perfect example of embedded finance. And as I said, in 2016 when we got into this, there was no name for it, and it was clearly not embedded finance. Now it's a perfect sort of use case for it. So what did we do? We actually were solving a pain point for colleges and universities around the country. And these colleges and universities have the pain of dispersing billions of dollars a year in financial aid refunds. That's the money that students have in loans that's applied to tuition. It's the amount left over, and the students need to receive that money. And it's a very compliant and overhead sort of heavy experience for colleges and universities. We've become experts in that space to be able to take that headache over for them. And we help disperse these about $13 billion a year in financial aid refunds to students. And we embed in that refund sort of process to ask the student and give them choices. Do you want to ACH this to an existing bank account? Do you want to open a bank account with us? Do you want to receive this through paper check? And we give them a myriad of options. But because our mission is to create an affordable and transparent, consumer-friendly banking experience, a lot of students choose to bank with us. And today it's a great opportunity for us to fulfill our mission and to be able to really start with students really young and build that financial relationship with them. And we also have relationships with 750 plus campuses across the country. That's 1 in every 3 college-bound students goes to one of those schools. So we also get to build relationships there. The second side of our business is really to be able to offer these banking services and this technology platform that we built to fintechs and brands, and more so brands. And our most notable client is T-Mobile, where we've launched the T-Mobile Money checking account. And we're everything behind it, the technology, the program management. We bring the sponsor bank to the table as well. And talking about embedded finance, why are they doing this? Well, it's a company, it's in a very commoditized space, it's really hard to differentiate. You're always looking at net new ads, you're looking at increasing customer lifetime value, and these are the things that the money product brings to T-Mobile. For example, we find ways to sort of connect with the core strategy of T-Mobile as much as possible through this bank account. So if you link this to your monthly payment of your wireless bill, you get $5 off each month. T-Mobile, for those of you that are customers, also has T-Mobile Tuesdays, which is a phenomenal thing that they've created where they have discounts with all these bunch of merchants, and you get accentuated points and discounts if you're using the T-Mobile Money debit card to make those purchases. T-Mobile also really has a travel agency, I didn't know that. But before we did a strategy with them where if you book travel on your T-Mobile Money card, you get discounts. So that's what I mean about creating synergies with the core and embedding that banking experience. So that's some of the use cases that we're doing. And going back to, for those of you in the room that are considering either offering banking as a service or on the other way around, I think someone from Nordstrom is speaking after me, you're actually a retailer or a grocer or an airline that wants to be able to think about offering embedded finance. Why would you do that? So it's really, T-Mobile is a great use case. It's about differentiation. It's about being able to increase customer lifetime value, loyalty, stickiness, to be able to, you already have a transactional relationship. Can you expand those financial services offerings without having to become a bank and use trusted partners to be able to create new revenue streams, more access to data, better personalization? A lot of businesses have huge interchange expense. So everyone's paying with credit cards. How can you help them reduce that by offering banking alternatives instead of those credit card interchange expense? And lastly, a lot of companies, we're all about financial inclusion. How do you give people more access to financial services? Well, if they're transacting with you anyway on a daily basis, it's a great way for you to actually play in the financial inclusion space. If you are thinking of offering financial services, there's a couple of points you probably want to consider. Be clear about the reason you want to launch, right? Because it's not that this is hard to launch, but it takes commitment, it takes focus, especially if you're not in finance and you're not in a regulated space. It's a learning curve, and so it's important to think about the reason and make sure that there's value addition to the core business. So for T-Mobile, even device financing and linking that to the checking account, et cetera, there's a lot of reasons why it's helpful to the core business to offer these sorts of things. It's also important for partners that want to get into this space, like brands, to understand that banking as a service providers like us or banks that are directly trying to get into this space are relying on you for the marketing. Like the reason that it's a synergistic is because we understand that you have entrenched customer bases. So we're reducing our CAC, right, and working with you, but then we're also trusting that you'll use your marketing expertise where you know your customers to be able to reach them, because these programs only work at scale. And lastly, it's important to create and choose a best-in-class partner that really has those three pillars that I talked to you about: the technology, the program management, and the sponsor bank, really wrapped up into one. So you have one accountable party that you can go to, that you can work with, and you take a pretty complex, I hope you can hear me when I move away, but take a pretty complex process and simplify it for yourself by working with a best-in-class partner. As I said, in 2016, when we got into this space, really to survive, we didn't know the term embedded finance. And I think that, we're only at the very beginning stages of what this opportunity could be. We're scratching the surface, and we're really, next slide, it's not working. We're really, you can, bullish, because it's about this opportunity, and why is because I think there's so many companies out there that there is such a use case for this. It just makes so much sense. The market opportunity is there. The technology is now there. You're not held back by legacy systems. We were talking to Tal earlier, who's from FIS, that has a core robust infrastructure, and now you can layer on technologies on top of that robust infrastructure that has history of decades of working, right, to be able to do innovative things like this. And as I said, financial inclusion, convenience, these things are front and center of the consumer's mind, and as a country should be important to us. So I think that even from a moral, ethical sort of standpoint, it's a trend that exists and it's so important. So with that, I'm at 15 minutes, so I think I nailed it. Thank